Welcome to Markets Now. I'm Michelle Rook along with Kent Beadle with Paradigm Futures. Grain still leaning mostly higher, except for some of the wheat contracts, which are well off of their session highs. In the livestock, cattle mostly lower, hogs to the plus side. And Kent, let's talk about the corn market first off. And really, we can talk about soybeans in the whole weather discussion here. We had rains over the weekend, but how much help did they do? And will we see any improvement in crop ratings this afternoon?
Well, that's the crop rating question. We'll get to that first. It is interesting. We anticipate that we might see a small improvement, or at least I do. I'm hearing trade estimates that are actually looking for further declines. And I think that that's also quite possible given the fact that Southern Illinois didn't get any rain, Missouri didn't get any rain. There are pockets within Minnesota, both in the western side of the state and southeast, that didn't get any rain. And Missouri, didn't do very well either, or Kansas. So we've got areas that missed. We certainly had farmers who were very happy that got an inch to 2 to 3 inches of rain that they desperately needed, and that's going to help them out maybe for the next couple of weeks. But there's a fairly large group of farmers who maybe got 3/10 to 7/10. That's good for 3, 4, 5 days, ties them over till the next system. The question becomes, what is the next system really going to deliver? And is it going to be able to deliver as much? The weather models continue to be somewhat scattered. They don't tend to want to project out a general line of coverage that's going to give everyone that inch to 2 inches of rain that they need. And the bad news is that we've got some heat coming in for later in the week, and then we see some heat out the week of the 4th of July as well. And so, unfortunately, there's going to be some growers that are going backwards, along with the growers that have gotten a lot of relief. And that leaves a market that is choppy, volatile, trading both sides of unchanged to a fairly high degree. We've been up as much as a dime and down as much as 7, 8 cents. It's going to continue to be that way.
Although funds have added massively to their position now long this market, aren't they?
Yeah, well, I think more to the point, they've covered a short in
Covered their
corn.
short.
They had a sizable short. They're now long maybe 60,000 contracts on the managed money position in corn. They're up to 80,000 contracts in the managed money position in soybeans. And both of those were near zero here just 3 weeks ago. To be fair, they could end up being as long as many as 150 to 200,000 contracts of beans. And historically, they've been long as many as 350 to 400,000 contracts of corn. So if things continue to get worse, they have a lot of room to buy. But when they are long, it certainly puts the risk in there that a liquidation event could chase them out again.
Yeah, but 56,000 contract swing in 1 week and a shortened holiday week, that's a big move. What about soybeans? Are we trading weather there? It seems too early for that. Or has this been the push from products or the demand and tight supplies that we continue to see in that market?
There's a lot going on there. First of all, this has been a product-led rally, I think, in beans here today. We saw soybean oil up over a penny a pound. Keep in mind that we were underneath 50 cents a pound in the front month contract here just a couple of weeks ago, and we've staged a really nice rally, and we were able to maintain that rally last week in the midst of the EPA mandate announcements. And so that was a market that didn't go down on bearish news. We did one day, and then we managed to crawl our way back and are pushing up against 60 cents a pound here again. Yeah. I think that the renewable diesel industry found that they had an opportunity to lock in a reasonably priced feedstock, and probably was taking advantage of that opportunity.
We had some early gains in the wheat market, some double-digit gains on some of the tensions over the weekend in Russia. Talk about that and why we sold off. Was it because of export inspections or what?
Well, export inspections were brutal across all categories, corn, beans, and wheat. But I continue to point out that the wheat market is not particularly liquid at this time, and we do have a fairly sizable short position in Chicago wheat held by the funds. The activity of the weekend with the insurgents and the ultimate truce, and it brings a lot of uncertainty into what might be happening over there. And of course, Russia being one of the large wheat exporters of the world, and Ukraine was as well, and they're at war. And then you have the infighting within the Russian army. It's all just leads to a lot of uncertainty, with a backdrop of the expiration of the Ukrainian export corridor coming up upon us, and the Russians continuing to say that they don't have any interest in extending that corridor. I can't imagine that the odds got any higher after everything that happened this weekend, and so the market is, reasonably concerned about, what we looks like from an export standpoint going forward.
Yeah, there is maybe a little threat there. Okay, we're also going into big reports here, end of month, end of quarter, but acreage report and quarterly stocks. We've got some estimates out there, and tell me what you think we're going to see.
Well, I thought it was interesting to see that the corn estimate showed acres down slightly, with bean acres up slightly. I know that there's a lot of analysts who feel that that's the way that things are going to shift. Our sources in places like Northwest Minnesota and parts of North Dakota, where we thought we might have some PP acres, is that the acres got planted and that they primarily got planted to corn. That being the case, along with some faster planting progress in some other parts of the country, kind of have me thinking that if there is a shift in corn, it might be couple 100,000 acres higher rather than lower, and that might come at the expense of soybeans. So average trade guesses were a bit of a surprise to me.
Quarterly stocks, though, look smaller in all categories versus a year ago, right?
They did, and what we find interesting about the stocks number is that I like going back to that March 1st stocks number. And if we remember, the corn number was over 70 million bushels less than the average trade estimate. The soybean number was over 50 million bushels less than the average trade estimate. And in both cases, the USDA chose not to make any adjustments to the balance sheet over the subsequent 3 months. So if by chance those stocks numbers end up being lower once again, USDA is going to be forced to make some adjustments. And if you look at the inverses in the futures market right now, it does bring into question whether or not those bushels are really there.
You are not the only one that thinks that. That's for sure. Okay, cattle market, seeing some pullback here. Cattle on feed maybe just a little bearish, but also is this anticipation on maybe some lower cash trade again this week, or what?
Yeah, well, we're already seeing, the early week, product market down a little bit, and we anticipate a lower cash trade here again this week. We obviously made some magnificent, spectacular highs here a few weeks ago, and since that time, I think that market was overbought. The futures market was overbought. You still have a fairly sizable speculative long position in cattle, and we're in the process right now of kind of liquidating out some of that froth that the market had. And of course, there's some seasonality at play here too. So we're expecting lower trade in the cattle this week.
Can you correct much more, though, with the big discount the futures have to the cash?
Well, that's correct. So far, that hasn't really stopped the correction from taking place. And
Okay.
The key will be how low does cash ultimately trade, because eventually you're going to have to converge those markets again.
Gotcha. And hogs, higher. We had a gap higher opening, I think, in the August even this morning. Is that market still trading this firmer cash trade, or, the funds have gotten out of a lot of that short position, maybe even have started to move long, haven't they?
Well, I don't know that they're long quite yet, but they're getting there. They've covered an
Okay.
awful lot of the short, that's for sure. And, with all of the stuff going on with Prop 12, maybe not being as bad for the industry, at least this year, is what people thought that we might have to deal with. Plus that major short position, plus the major discount that pork has been carrying to beef. I mean, all of those things kind of pointed to a decent rally in pork, and we finally managed to see it. Question is, how long is it going to run? With the July contract up here in the low to mid 90s, I kind of think that if there's a producer out there that hasn't gotten some sales made, this is probably a pretty good opportunity.
All right. Thanks for joining us, Ken Beadle with Paradigm Futures. That is Markets Now.